Welcome to this Nordic Property Insights webinar hosted by Fragalu. My name is Andrea Carpenter. I'm Director of Women Talk Real Estate, and I'm going to be your moderator today. I'm delighted to have a number of guests this afternoon to discuss the Swedish residential property market, or as the title suggests, the Gordian Knot that is a dichotomy between the housing shortage and how to solve this. We have 4 sessions this afternoon that will give us overviews of the residential market, both from a legal and market activity perspective. These are then followed by 2 panels to give us an inside and outside view of investing in the residential market. To begin, I'm delighted to welcome Tord Svensson, partner of Evershed Sutherland, to give us an overview on the characteristics of the Swedish housing market from a legal perspective. Over to you, Tord.
My name is Tord Svensson, and I'm a lawyer at the Stockholm office of the global law firm Evershed Sutherland. And I joined the firm some 10 years ago, and I have since then headed up the Stockholm real estate and real estate finance department. We are advising on all legal aspects of your real estate throughout the investment cycle, basically joining you from A to Z. And today I have prepared 3 brief slides to introduce you to some fundamentals of this residential investment market. And the ambition is also to take you through some key elements of the legal system that may be relevant when you prepare and execute your investments in this Swedish market. The heading of today's session, it indicates indicates that there is a Gordian knot to this Swedish market restraining it. And unfortunately, I will start off by saying that the Lady Justice sword will not be the sort of weapon that you can use to untie that Gordian knot, however. But the legal system is, of course, something that you should be on top of when you start your investment venture into Sweden. And the first slide of the 3 I mentioned is basically trying to tell you what we're looking at here. The real estate, the residential investment alternatives. There are some 10 million Swedes, and we spend our time in almost 5 million homes, and in the country there's some 5 million dwellings, and those units are split into a bit roughly over 50% single detached dwellings, and the rest, the other 50%, is multifamily housing. Boiling that down further, half of those ones, 1 million, almost 0.9 million goes off in cooperative housing cooperatives, and that brings us to a rental residential market of roughly 1.4 million units. And this multifamily rental dwelling market is dominated by the public housing companies, which basically runs half of that stock that I mentioned. And the background of this 50-50 split can be basically taken into 3 or 4 political developments taken in the post or starting off in the early post-war stage. Sweden took a unique path, saying that, okay, we will not have social housing in Sweden, which was an established concept, which in essence provide housing for the less fortunate and exposed people. Sweden took in the post-war area the step of introducing a concept of public housing. And that public housing complex was based on a legislation saying that each Swedish municipality needs to provide adequate housing to its citizens. And that is not only providing shelter, but also political ambition to provide housing that is good and modern and improving quality of each individual's lives, basically. this sort of political movement was peaked, I should say, in the end of the 60s, beginning of the 70s, the Million Homes program, which in 10 years executed some 1 million homes in Sweden. And that is basically the legacy which we see around every, the legacy of that 1 million program. And the rental market in this sort of context is also based now on public leasing agencies. Only in Stockholm there were these public leasing agencies have been in place for over 100 years, and only there was 18,000 dwellings provided or flats provided through this municipal system. And the product type, residential, is a institutional, very much driven by institutions. There's no mom and pop business. There is no sight of anyone sort of placing their retirement money into a single individual flat in Sweden. It's all institutions that are driving this in the context of having these public residential companies, and also big builders who have been developing their portfolios in parallel. And regarding the subletting, there could be, of course, a potential market for the 0.9 million condominiums, but those are all restricted. It's not possible for the individual homeowners of the condominiums to do any proper sublettings, only for shorter periods. Okay. And coming on to the investment product, what you see here, you have this existing stock of 1.4 million, but there is also in recent years some decent new production going on, saying that we have a peak in 2018 with 40,000 dwellings, which is the highest since the 70s, and the million housing program which I mentioned at the beginning. So you get build to rent, you get also build to sell, and there is the existing. In relation to the special product, student housing, you see that as well. Co-living, not so much. Retired homes is a separate industry where you would not do the regular investment, and the service apartments are not very common. We want the next slide, please. And then saying that is the I don't know if this works properly to change to the next, Linda. Next slide. Yes, maybe. Okay, that brings us from what we're looking at, the 1.4 million dwellings, coming on to what you need to do and need to be aware of when you want to execute your transaction. The basic general information is the basic fundamental of Swedish property market is that there is information. You will always be able to rely on a publicly driven land registry, and you can also always rely on the legal system. When there is an eviction, your tenant doesn't pay, you will be able to evict them, and there is also a good and robust system for resolving disputes. I think that is financing is also available. Swedish banks have always been keen on financing residential projects, and I know also that we have international banks coming on since several years. In the outset, they were a bit restricted due to the regulatory system here in Sweden, but they are now on board also for housing. The specific what you need to know is that leasing is standardized. The Landlords Association, they provide every landlord with one pager which they can use, and which also are widespread use as the lease contract for housing. There is also protection of tenure, very strict in favor of the tenants. They can stay as long as they pay the rent. Basically, you need to know that as landlord, everything that will effectively make it possible to get rid of a tenant is when not paying, which is of course the important part of it. You do a share deal or an asset deal. An asset deal, there is always the risk of a corporate housing association stepping into the transaction with their preemption rights, which is down there on the list. This is for asset deals only. If you do a share deal, and with no risk for those. Notary, but and where you will find vacancy. Forward funding, yes, that we mentioned earlier on, the rent and to sell segment, they can finance. We in an international sort of context very efficiently, and Swedish well. Jumping on to one of the most interesting topics, when you make your real estate investment, how do I get my funds improved, and how can I get a rent increase? The Swedish rent regulation system was originally introduced with these public housing companies, that they are the driver of the rental market. The rents are set in sort of by these municipalities companies, that the rent they charge and the costs they have, they drive the rent that you as a private homeowner may set. And rent increase is not based on market, but it's based on a utility value. So if your flats are equipped in a certain way, you may charge a certain rent. If you upgrade, refurbish, renovate, then you can also increase the rent, otherwise not. And any tenant may turn to the local rent tribunal to test the rent. If you as a landlord try and increase the rent more than the market, more than these public housing corporations, then each tenant can turn to the local rent tribunal to get that tried. The sort of touch of market rent in Sweden applies for newly produced stock. If you can build a multifamily house newly produced, then you may apply a higher rent for 15 years. And that is basically throughout Sweden. But at the end of the 15 years, you have the risk that your rent is rent is being reduced. Basically, short and quick, like a machine gun, maybe. It seemed for some friends, Andrea, that would end my presentation, please.
It's been really helpful to get that legal perspective as a kind of a cornerstone to what we're going to talk about today. We'll have the market's perspective with you in just a moment. Thank you very much and welcome back. We're now going to have the market perspective, and to give us that guided tour around the key market activities over the past 18 months and what we can expect from the market going forward, I'm delighted to hand over to Joachim Nordström, partner at Nordano. Joachim, over to you.
Thank you very much, Andrea, for that introduction, and good to be here today. As said, I'll be discussing the Swedish residential investment market, which is a part of the market where myself and I have been very active during the last number of years. And we continue to be active in that space, and hopefully we can provide some interesting insights into what we're seeing in the market currently. So just to start off, I think it's fair to say that the overall interest right now for investments in the Swedish residential segment is at an historical high, perhaps higher than it's ever been. And we'll get into how that's affecting the transaction market. But before we do that, I think it's relevant to just briefly recap what it is from our point of view, that's driving this exceptional interest. And in a broader perspective, what we've seen in the market during the last 12 to 18 months is probably best described as a flight to safety or an increased allocation of capital toward low-risk investments. And in that market environment, what we're seeing is both the Nordic markets in general benefiting from an international perspective, but also within the Nordic markets, not least the residential sector becoming highly sought after by an increasing number of investors. And the Swedish residential sector specifically offers a very attractive market dynamic for low-risk investments. We have a significant housing shortage across the country, not only in the main cities, but from north to south, really. And also we have a regulated market, which means that there's a high level of stability and predictability built into the system and really a high level of downside protection. And with that said, however, and within the same regulatory framework, there's still opportunity also to increase rent levels and to realize potential through active management, investments in properties and apartments. And so that combination between downside protection and many times, particularly in the older stock, a potential I think is quite unique for the Swedish market. And when we look at historical returns, we also see that the residential sector has delivered very strong risk-adjusted returns over time. And so all in all, I think this is a relatively good view of what it is that's driving the interest right now and really feeling that in the markets. If we look at the transaction data for the market, we can see that the activity has remained high in spite of the COVID-19 pandemic, and it continues to be high in our view. It's so far in 2021. Transaction volumes last year were at historical levels. That goes for the overall market, but also certainly for the residential sector. We reported, according to our data, somewhere around 60 billion Swedish or 6 billion euros of residential transactions during last year, which is in line with the previous 4 or 5 years and remains roughly 30% of the overall market. And so the residential sector is a sizable market, it's a liquid market, and continues to be a big part of overall transaction volumes in Sweden. A very clear trend that we're seeing in the transaction market and that we've noted during the last year is the increased number of newly built properties or residential development projects in the market. And that's represented here by the dark blue line in this graph. And as you can see, that's typically no more than 10, 15, maybe 20% of the overall residential turnover. But during last year, that was upwards of 60%. So that's a significant increase. And we've really seen an increasing number of developers turning to the rental housing part of their business and divesting projects at relatively early stages. And given the very strong interest that we see in the market, I mean, I think it comes as no surprise to most of you listening that during the last year or so, we've also seen a significant increase in pricing in the market with a yield compression, I would say, across the entire sector, both for the newly built part of the market, but also for the older stock. But given that there's been a lot of focus on the newly built part of the market, I think that's where we've been able to most clearly observe this development over the last 12 to 18 months or so. And that's what I've tried to capture on this slide here, which is data from transactions in the Stockholm market with newly built assets during 2019, 20, and 21. And so it's a relatively small sample, but I still think it captures the development that we're seeing and that we're feeling in the market. And so when we look at this, we can see that up until December of last year, we hadn't seen more than one transaction trading in the Stockholm market at above 50,000 per square meter, and that was the leftmost bar in this chart, which was in early 2019, and I think many investors and many players in the market consider that a very high level at that time. And for quite some time following that as well, around 50,000 was considered sort of the top level in the market. Following December last year, however, we've seen already a handful of transactions above 50,000 per square meter, both in Stockholm, but actually also outside of Stockholm. And many of these, or a few of these, have been above 60,000. And I think we also have reason to believe that there will be additional closings shortly above 60,000 in the Stockholm market. And so been established a new level, let's say, of the top market in Stockholm when it comes to newly produced. That's somewhere 20-25% higher than what was considered the top level only a year ago or so. So that's a very significant development. And I think what's also interesting when looking at this data is that most of the top recordings, as you can see here in the darker orange bars, have been driven by international buyers, and we see them very active, particularly in the newly built segment. And when we talk to these investors, we feel that they are typically more yield focused and return driven than the domestic buyers who have longer history of perhaps benchmarking per square meter prices or looking at the private co-op market. And so what we see now is international investors focusing on yields and also comparing returns to their domestic markets. And so we might have German investors, for example, saying that, well, if I can buy logistics in Germany at 3.5%, then I'd much rather buy residential in Stockholm at the equivalent pricing. And that being said, it's not crucial if the per square meter price is 50 or 55 or 60. And so I think that's been a really key driver in pushing the levels, at least in the newly built segment, to new highs. Another interesting data point, I think, in this context is also the development of rent levels in the market. And this is not strictly a transaction data point, say, but it certainly has implications for pricing and trends and strategies that we see in the market. And so this is an illustration of the development of both rent levels in newly built assets, which is the orange line, and for the older stock in the blue lines. And what we can see clearly is that the development in the newly built segment has been much stronger than for the older stock. I think a couple of things to note on that is that first, of course, when talking about record high per square meter prices or capital values in the newly built segment, this development is a driver in that as well, combined with yield compression, as we just discussed. But also second, I think this development has been a key driver also for the older stock in the development of what we like to call the sort of active management model and the ability to invest in the properties to increase rent levels. And that is in that when the spread between the rents in the older stock and the newer stock has increased, there's been an opportunity to sort of introduce a third option into the market, which has been the renovated apartment, which is an older property with an apartment renovated to newly built standard and where you can negotiate a rent level that's somewhere in between the two. And so this has really opened up potential, we feel, for sort of moving residential investments from what's typically been sort of a buy and hold passive strategy to actually working actively with increasing rent levels. And that's been a huge driver, I think, also in the appeal of the Swedish market, both for domestic and international buyers during the last number of years. And when it comes to the investors active in the market, I think it's fair to say that it's a very dynamic market with a very broad investor interest. We see the residential sector in Sweden attracting many individual investors, but also many different categories of investors. And I think part of that is because there's potential to invest across the risk spectrum, basically, and have different strategies, which allows for both diversification and specialization within the same market. Part of that is what we touched upon, the very strong housing demand across the country. So there are local, sort of regional geographies that offer certain characteristics and are investable to investors, but also the rent development that we just discussed, which means that in the same market and with the same regulatory framework, we've seen the emergence of different rent levels within the same market. So we have one rent level for the unrenovated apartment in the older stock, and we have a second rent level for the renovated apartment, and a third for the newly built. And now we have newly built with investment subsidies, which is a fourth level. And so all of this creates a really interesting dynamic and the potential to sort of specialize again and attracts a wide range of different investors with different preferences. And finally, I think it's interesting to note that although it's certainly the case that the market is very competitive and we've seen yield compression in the Swedish residential sector and the property market in general, for that matter, over a long period of time, it's interesting to note or keep in mind that financing costs or interest rates have actually come down even quicker during the same time period. And so when we look at the the spread between yields and financing costs, the yield gap, that's actually at an historically high level. And so it is possible still, I think, also in not least in relation to other markets where this dynamic might look different, still possible in the residential sector in Sweden to make attractive investments, basically. So just to summarize briefly, our view is that the interest is at an all-time high in the Swedish market right now for residential property. We see very high activity in that part of the market. We've seen that in the last year, and that has continued into 2021. We see record pricing, particularly in the newer stock that's been apparent, but I think we also have reason to believe that we'll soon see some record prices also in the older stock. A very dynamic market with a wide range of investors active, and although the market is certainly pricey to some extent and competitive, the yield gap is at an historically high level, and there is potential perhaps for yields to compress even further going forward. So that's all for me. Thanks for listening, and I'll hand back over to Andrea.
Joachim, thank you so much for that. Maybe I can ask you just a quick question, really. You mentioned that we're at historic high levels in terms of pricing. We're breaking some barriers there. You know, this session's looking at the inside and the outside view. Who do you think that's going to affect most, domestic or international buyers going forward?
Good question. Well, I think what we've seen so far again is to some extent, at least in parts of the market, the international investors being the ones that have been paying the highest prices. So I think to some extent, I guess the domestic investors feel that, well, we'll hear about that in the coming panels, I guess, as well, but feel that the competition has become even fiercer, I guess. So it's hard to say who it's going to benefit most, but for the time being, I think we're seeing a lot of international presence in the newly built sector, and certainly also high interest for the older stock.
And you mentioned interest rates are obviously still low, which might be good for financing debt on these. Are players employing debt more on these residential portfolios now?
I wouldn't say that they're doing it more so than previously. I think there hasn't been a significant change in that, but it's certainly the case that the robustness and the solidity of the residential Swedish sector is such that it's definitely a product that works well for financing, and banks are very active in the market as well and provide financing on good terms. So that's what we're seeing. But I wouldn't say there's a sort of clear change in terms of LTVs or using debt compared to previously.
Okay, well, Joachim, thank you again. Thank you for setting the scene on the market view. We'll be back for our first discussion, panel discussion in just a moment. Now to the first of our panel discussions. This one will be focused on the inside view as we assess the current market from a domestic perspective. I'm delighted to welcome our following panelists. We have Patrick Emanuelsson, CEO of Haber Fastighets, Jonas Andersson, CFO of Slato Forvaltning, Marlin Rosen, Deputy CEO of Renova, and Andrew Morfiadakis, CEO of Clarabow. So thank you so much for all joining us. Now, Patrick, maybe I can come to you. You heard Joachim talk about finding, increased levels of interest, breaking kind of new pricing levels. How are you finding value in the Swedish market at the moment as a domestic investor?
Oh, Joachim told most of it, but we are very focused on to get new properties. New properties have a yield that is twice as high as the old properties. And to make the value of the old properties not renovated, it has been the market value that has been increasing for, as I know, the last 16 years. So we had a average growth about over 6% on the market value every year, the last 16 years. Otherwise, you know that the old not renovated houses have a yield that could be less than 2%. So and if you have properties in attractive parts in Stockholm, you have a very high pricing on all properties also. So we cannot really have the same escalating in renovating as you can have having properties with not that same pricing. So and then the pricing and the way in the regulated system is that you get the same increase of the rent if you do the renovation out in the country as in Stockholm. So for us, it's a big achievement to get a good result in renovating the old properties. But we will have a yield that is better than 0.5% after renovating. So new properties twice as high yield. So new properties and our own land allocations.
Okay, so you're seeing value in older renovations as well then?
Yeah, but not as much as you can see if you have properties that is not in attractive areas, because the increase of the pricing on the old properties has been so high, 6% every year the last 16 years. So you don't have that gap that you can if you buy properties that are not so high priced. So it's the market value has been the good part for us, talking about the not renovated properties.
Okay, that's being able to sustain that. And Jonas, what do you think in terms of whether your preference is for finding value in maybe new or older stock?
Well, thank you, Andrea. Thank you for having me on this panel. From my perspective, I would say that there's definitely value to be created both in old and new stock. And in new stock, I would say that the driver of value is coming in either early in development stages, potentially buying in a forward structure, and also focusing on strong and growing geographies with continued potential for rental growth in the long term. And when it comes to old stock, it's much like Patrick said, that it's about active property management and also investing in the real estate to improve NOI and hence drive values. And you could do that not only in the strongest of geographies in Sweden, but also in the cities.
Okay. And do you think international activity is affecting pricing in either of those areas? I mean, I feel like an international buyer would probably like to come in and buy newer stock. That would be where the competition would be.
I think that Joachim had a lot of excellent points on this subject. And as he pointed out, I think it's clear that the international investor demand has been driving pricing for some time, both in terms of old and new stock. And I think there are obviously many reasons for this. One being that the Nordics in general, and perhaps Sweden in particular, is perceived as somewhat of a safe haven. We have a liquid transaction market in the European context, and in addition, the rental regulation of the residential market is perceived as stable and foreseeable, and that for a long time has been a significant supply-demand offset in terms of residential for rent. But when it comes to how this affects the domestic players, I would say that to some extent it takes a little time for domestic players to keep pace with the current price point in the market, both in terms of old, but in particular when it comes to new stock, where, as Joachim said, 60 being the new 50 in terms of PSM pricing. When it comes to the old stock, we saw a first wave of platform acquisitions, basically starting with Blackstone acquiring the majority position in Carnegie in 2016, and hence Vonovia acquiring Hemla last year. And that was a game changer in terms of pricing for the old stock. My sense is a bit that the price development for the old stock has stabilized somewhat, whereas the price point obviously for new stock has continued to increase. And I think all other things equal, older stock would require more from a local team to manage. It's a more difficult asset type to manage in order to generate value, to invest actively in that stock. And for international players without a strong platform, I think that acquiring new builds is easier and probably more about allocating capital to this attractive segment. And I think this second wave, if you will, international buyers is driving pricing. For domestic buyers to be competitive again, I think it's all about using that local knowledge to make the right acquisitions, coming in early in development, using your local relationships to generate off-market transactions. And when it comes to older stock, again, I think actually that domestic players are quite well placed to be competitive, largely because of the advantage of being local, understanding local demand, and sort of being able to manage and develop assets in a more efficient manner. And also perhaps being able to move out a bit on the risk scale in terms of geography, not only focusing on the major metropolitan areas.
Yeah, and I think, Marlon, maybe I can come to you about, being outside Stockholm. Is that one way to avoid the competition? Are you finding value in some of the cities outside the capital?
We are experiencing a greater competition in acquiring residential properties and actually community properties in the smaller cities like Skurup, Bjuvs, Svedala. All cities that are small, but they have good offer a good public transportation opportunities, and they have a good infrastructure. And it is fascinating to see the yield getting lower and lower, and even at a faster pace as it is in the larger cities. But it is, I think, where we can find good value is the smaller acquisitions, just as Jonas was talking about. I mean, we are in the market, we can find the small ones that can complement our existing portfolio and contribute to an effective property management. But for larger acquisitions, especially, we see the same competition in the smaller cities like Landskrona and Eslöv as we do in Malmö. So to be able to grow in a profitable way, we have to do our own project development, get in early in the project to be able to raise some profit.
So we're seeing a lot more people maybe move to cities outside Stockholm. I wonder, is it the same affordability for them then? Are there challenges in sort of creating a product that works for you, but also works on the affordability side for them, likely expecting slightly lower prices outside the capital?
Mm-hmm. Yes, and we have this rent regulation system that the older stock is based on the utility value system, and the only way, I mean, demand won't raise the rent on the properties, but we do some rent increase renovations on our properties, but we have to make further investigations to identify the ideal rent, because the ideal rent where the vacancy risk doesn't increase and the ratio of relocation doesn't get any higher isn't always the same as if you do a full rent increase renovation. So and with people moving out, maybe that won't be as necessary. You can do the full rent increase renovations.
So you think the potential for those markets might change if we continue to see more migration out of the major cities?
Yeah, and for the new projects as well, where you can put a presumption rent that stays for 15 years, and there you can gain some more and get some more for affordability. Absolutely, but you have to develop those projects yourself because there is quite some competition for those.
Andreas, I wonder if you can give us your view on the cities outside Stockholm, whether you feel they offer you value or whether you struggle with affordability.
I think the market is still quite good outside the major cities, Stockholm in particular, and the reason for that is mainly because of the competition. Competition is much less outside the major cities, so you can still get some decent yield transactions there. Of course, it does have the vacancy risk is a little bit higher outside the major cities, so you need to be in control of that when you work with a refurbishment program. But I mean the housing deficit is huge, and the demand is huge even outside the major cities. So I mean both the area of refurbishment and new construction is highly demanded outside Stockholm, Gothenburg, and Malmö.
And what do you think you have to demonstrate as a player to be sort of successful in those markets? What are the ingredients to success for you?
I think Jonas was quite right when he said that you need to have a strong local management that actually knows the market very well, and that you have an active property management on site. I don't think a lot of the international institutions are actually can offer that. So that's why competition is a little bit lesser outside the major cities. But of course, if you have a local management, it is much easier to find some kind of off-market deals, which will be one key way to actually increase or make any transactions ahead.
Okay, and Patrick, do you see that wave of capital that Joachim talked about, kind of seeing international buyers coming out of Stockholm? Do you see that they will actually now sort of threaten other territories that you may be working in?
Absolutely, but we have a lot of own properties, and we get the same increase of the value. So in that, we are not a loser anyhow. So I think it's possible for us with the low interest and the increasing of our own properties. We will be in the game and could get a good competition with the buyer from abroad.
Okay, and Marlon, do you agree that you're going to get more competition in those markets going forward?
We will, but I think we have to look at the need for having a local management. You can't manage these properties from abroad. So I think as long as we are in our market, we have a big advantage in finding off-market, but also making value of the actual properties that we own, keeping the value for a long time.
Okay, and Jonas, maybe I can ask you just about the dynamics of the market. You have a housing shortage. There's a lot of interest in this. Are you able to meet the demand that there is there, or is there anything that's kind of stopping you doing that?
I think in the growth regions and in metropolitan areas, we're not close to meeting the demand. It's been such an underinvested segment for such a long time. I think what you have to be mindful of as an investor is when you push the geographical scope a bit and go out into some of the regional cities, you'll find that the rental market is more in balance. You don't have the queue time that you have for a rental apartment in per se Stockholm. That to some extent sort of caps the rent potential if you were to actively work on refurbing and investing into an older stock type of real estate.
Yeah, and Andreas, when you look at kind of investment into residential property, how does it? I mean, when we think about residential, it's become a merging sector across Europe. It's kind of got lots of competition at the moment. You know, industrial kind of, you know, not offices so much, but lots of different types of residential. Is that the same in Sweden? Is there actually institutional appetite for other sectors that are competing with residential?
Sorry, could you just repeat the question, because it was lagging a little bit here in the end?
Oh, sorry. Yes, we've got a few technical issues today. I suppose I'm asking about the competitive, you know, the attractiveness of residential as a sector versus other sectors in Sweden at the moment. How does it sit against maybe logistics, which, you know, with the pandemic and e-commerce is going quite wild everywhere else?
I think the competition in the housing sector has been quite high for the last couple of years, and I think just the housing segment is a few years ahead of other areas as like logistics. So I think I mean the competition is strong, and I'm for sure it's going to be strong for quite some time. And like I said before, I mean, if you for us, a small company outside the major cities is, I mean, we can't even go close to buying anything in the major cities. That's why we're in the smaller cities, and so we can still get some kind of good yield as now. What I hope I see is that the competition actually move outside the major cities to the smaller cities, because if that happens, that is going to be a main risk for some of the companies that work outside the regional cities.
Yeah, and Patrick, maybe the same sort of question to you. Do you see other sectors rivaling residential and investment? We might see some investment flows go to logistics or even to offices.
No, I think we will see logistics, of course, but I think from offices and from retail will come into our market. So for a lot of years ahead, I think our competition will be increasing. Absolutely.
Yeah, and Jonas, what's your views on that? Do you think you're actually going to see more capital increasing inflows into the sector rather than less? That this is kind of an unstoppable force in a way?
Well, I think there's nothing that is unstoppable in life, but I think that the attractiveness of the segment is sort of here to stay for some time, and I don't see in the near to medium future that we have any reason to believe that the sector would attract less capital. I rather think it would be more. But having said that, as you said, there are other sectors such as light industry, logistics that are also quite in investor demand. But I think that the risk return fundamentals of the rental resi in Sweden is strong and will remain so for a foreseeable future.
What do you feel for the markets, Jonas, overall, prospect wise for the next year or so? Do you see activities level increasing, and what risks do you see to that?
I do think that the level of activity, which is already high, will continue to increase. Again, we continue to see a strong influx of international capital trying to find investment case into Sweden, not only in resi but also across other sectors. I think that will increase. But in terms of risks, I mean, obviously we see some tendencies of inflation here and there, and that could be one potential risk for the real estate sector as a whole. That could be. I think that's one is on everyone's radar. Otherwise, the supply of debt, both from capital market but also from the banking system, is strong. So I think we're looking at a strong transaction year with additional activity.
Marlon, would you agree with that? A strong transaction year ahead of you, and what do you feel the risks of that might be?
I do feel it's going to be a strong transaction year ahead as well. The risk I see is that there are a lot of new projects coming up, new apartments being built, and sometimes maybe too fast. I can see some indications. I was talking to a property owner in Växjö, and that is the capital of the county Småland, and has its own university. And he was telling me they had to give discounts on the rent to get all their apartments rented out, the new apartments. And that for me indicates that you have to choose your market and where you do your developments to be able to get the rent you want that you have been calculating on.
Yeah, so there might be some concerns about pockets of oversupply then, rather than an oversupply in the whole market.
No, there is a defect of housing, so that's definitely, but on isolated places there can be too much. Yes.
Yeah, Andreas, would you agree with that? Do you have concerns about different pockets of the market actually oversupplying?
Yeah. I mean, Malin is quite right. Especially when it comes to, I mean, a city like Växjö, where we are seeing that there's a lot of newly built apartments that they're having. Constructors are having very difficult to rent it out, and in some way, and one reason for that is basically because the rent is way too high. I mean, when you come to cities outside Stockholm, I mean, you have to adjust the rent per se. Some of the newly built apartments around the country, the rent is way too high, and that's why they're having some kind of increased vacancy risk there. So I mean, that is definitely.
Sorry, go on.
Sorry. No, I mean, so that is definitely a risk, but I think if you have a solid and local property management, and you actually know what kind of demand and what kind of amount people actually can pay for an apartment, there is still a lot of value to find outside the major cities when it comes to new construction and refurbishment apartments.
Yeah, and Patrick, finally, is that a major? Are there other types of concerns in the larger markets, or is it? I'd imagine it's not going to be oversupply there. If there's any other risks, it might be something else.
No, I think it's as Andreas says, it's the high price of the newly built properties that could be a risk, because it is very high, and it's the difference between the old properties and the renovated properties and the new properties. The gap is too wide, and I think that is a risk if you're not working in the Stockholm city or so. But I think even there it is you have a limit how high the new rents could be.
Yeah, I feel like there's an issue around rental levels, basically, which is an affordability issue that Marlin, you touched on earlier. So Patrick, does that mean that you think there'll be more activity in the larger markets and people start worrying about whether they can achieve those rents?
If you have rents as in Stockholm over 2,000 per square meter, of course you will have that. If you have the possibility to take loans and get a tenant-owned property, of course you will get that. But if you get out in the country, I think if you have a rent in 2,000, it will be a problem. So you need to work with that. But as I said, and we have heard, you have this other market with renovated properties, and the renovated properties is about 500 per square meter lower rent, and they are as new ones after are renovated. So I think this investment support that is coming from the government is important in the long run to make the market work all over Sweden.
Yeah, it sounds like adding value to those older properties is where you're going to find that value in the market at the moment.
Yeah, the biggest problem with the rented market is that the not renovated properties has too low rent, and that's a problem that nearly no one talks about. But I think that's the big problem, because everyone wants those apartments, and very, very few have them.
Okay. Well, it sounds like there's going to be plenty of capital coming in to maybe help renew those properties. So Patrick, Jonas, Marlin and Andreas, I'd like to thank you very much for giving us that domestic perspective. We're going to put some of those questions to an international player in just a moment.
Thank you.
Thank you.
So thank you to that panel for their insights on the domestic side. So we've now going to have some insights into the international mindset here in Sweden. So I'm pleased to welcome Per Eklund, CEO of Victoria Park and Embla. Per, thank you for joining us today.
Thank you very much. Nice to be here, even if it's a digital meeting.
Yes, I'm afraid we're getting used to very much this virtual presentation. So can you just tell us a bit about the company to understand that international perspective that you're able to give us today?
Yes, of course. We we like Sweden, first of all, because it's very transparent, and we like the regulated market, and actually the amount of residential rental apartments in Sweden is quite big. So that's the main driver for us why Sweden is so interesting.
Okay, and Can you just tell about the background of your company? I understand it's got a German owner, so that just gives us that.
Yes, sorry.
Okay.
Yes, we're owned by Vonovia, and Vonovia is the biggest residential company in Europe, actually, and they have 400,000 apartments in Germany. And since 3 years ago, we decided to enter Sweden, and we started with Victoria Park, and then Hembla, as we have talked about before today.
Okay, and what I know about the German market is they have an extremely large regulated market as well. So what do you think, why has that company come here and invested in you?
2 reasons. They are extremely big in Germany. So if you would like to be bigger, you have to expand. And since the German market is regulated, and we like that, and that's why we wanted to go to Sweden. And of course, because of Sweden is a very transparent market as well. But we like regulated markets because it's predictable and it's stable.
Okay. So you don't have concerns about the sort of government involvement in the market. In actual fact, that's a plus for you in terms of that regularity of income.
At the first view, it could be a problem. But if you look at Sweden, there's so many apartments owned by the municipalities. So you're almost in the same situation as the municipalities. So they have to handle this market quite carefully.
Now, you've heard our domestic panel talk very much about being on the ground, having the asset management. How do you compete with that as an international buyer?
I think you have to buy a company. So you will have to, because you really need the local management. So you can't sit in Berlin or whatever and try to manage a resi company in Sweden. You have to be on the ground.
Mm-hmm. And is this a market where you're looking for a core return, or kind of what would be your investment approach? I think many residential markets have experienced quite a lot of private equity coming into their markets, expecting very high returns. What's the risk appetite from your side?
Yes, of course, that could be a way to look at us, but I think the difference is how we act. And if we have 400,000 apartments in Germany, we are not looking for exit, because our job is to keep the properties and keep the apartments. So we are, from our point of view, we have a totally different approach.
Can you tell us more about that then?
Yes, if you look at us, we are a resi company. First of all, we are not private equity. We are a resi company. So our job is to manage our apartments and have a good return from that, not have a good return from exits.
And okay, so it's really about, again, back to that stability of income and not a capital return from a quick sale in that way. But you must want to add value somewhere. I mean, how do you take a value-added approach to the projects that you have?
Yes, we would like to add value, and that's very important for us. And I agree with Patrick when he says that it's a very, very low yield on old properties. And that's why we have chosen B location, not A locations. We have chosen B locations, but in what we call it A cities instead.
Okay, so you're in the big cities, but you want to be in kind of more suburban markets.
Yeah, exactly. And then we renovate. But another thing we also like in Sweden is that the heating and water and so on is included in the rent. And since we are buying old properties, normally there is a lot to do. And then we can have a value increase even from that.
Yeah. And then Patrick talked about those opportunities being in older buildings that need renewing. So is that where you're mainly focused as a company?
Yes, we can focus on the rents, of course, but we can also focus on the costs for utility costs, for one example.
Okay, so that factors
if we are good at that, we will have a return from both sides, and that would be very good for the NOI.
Okay. And in terms of like being an international investor in a market, you often don't get the off-market deals. You don't see the inside track, as it were. How do you keep up with the domestic players? Are they one step ahead of you sometimes?
No, because we are in Sweden. We are 500 Swedes in Sweden running our properties. So that's why it's very important to buy an existing company, because you can't sit in Berlin and manage Sweden, for one example. You have to be on the ground, and you have to be run by Swedes.
Yeah. And if you think more generally about other international buyers in the market, I wouldn't expect you to name any. Do you see others taking a different approach where they are sort of trying to parachute in and maybe do that from a distance?
Yes, and they will have some problems. And if we go back to the 90s, the Swedish company who had the toughest times, that was a Swedish company who entered Germany and tried to manage it from Sweden. Mm-hmm. So of course, it's always you need to be in the market very locally. Mm-hmm. It doesn't matter which country we're talking about.
And are you also looking at new build opportunities? Again, that seems to be a flavour of the month for many players.
Yes, we do that as well, but we only do it as a densification in our own properties.
Okay,
so we don't try to buy land, because if we buy land, the seller of the land are normally quite clever, so they will put a price on the land, so we will end up in a more or less same situation as just buy a newly built property.
Yeah, and do you feel the same pressure that domestic buyers do in terms of the capital flows and the competition that you're seeing? Do your German owners suddenly start to think, well, this is getting quite a hot market?
Yes, I do. I think every year I think that we're coming to a new platform. And let's see for how long time it will continue. But yes, it's been more and more expensive.
Yeah, and do you see those prices as sustainable? I mean, Joachim mentioned hitting new benchmarks in the last year. That 60 is the new 50, I believe, is the phrase for Stockholm Resi at the moment.
The first view is that it's crazy. But then when you start thinking about it, it's not so crazy, because as Joachim said, the bond market is also in that some way crazy. So you don't pay so much for the money. Mm. So if you think of that, no, I think it's quite reasonable. It's never cheap, but it's reasonable.
Yeah, but there has to be a moment where you think, okay, that's not sustainable anymore. If we're getting to 70 or something, then presumably things might start to change.
Every year when we come to the new platform.
No, yeah, everyone says it can carry on, and I suppose that interest rates again would be another aspect that might if they start to go up, that might change that scenario, right?
Yes, of course.
Yeah, and what do you feel your prospects are? What will you be focusing on as a company in the next year as an international capital in the market?
This year and next year, of course, we would like to grow, but we will also focus on property management. Mm. We have 38,000 apartments in Sweden, and we are not in A locations. So we really have to be good at manage our properties.
Okay.
Because we renovate, and the rents are not the lowest. So we need to be really good, because we don't like vacancies.
Is there the same issue that we talked about with Marlin about kind of affordability when you move to those locations, that actually it's more difficult to get the rents that you want?
Yes, but we would like to have the high rent, but add other values so that we can have the rent. So our tenants feel that they will get, it's affordable. It's not cheap, but it's still affordable, because the location is good, the service is good, and so on.
And you think that so the value for money is there for the tenants?
Yes.
Yeah. And what about other international players? Do you think we're going to see a rise of capital flows? Other companies coming in, buying platforms like similar to what's happened here?
I think at least many will look at it, because Germany is a really, really big market in Europe. And after what happened in Berlin with the rents, I think a lot of companies will at least look for other countries.
Do you mean that's because Berlin tried to impose the rent freeze, I think it was, or
Yes.
or the fact that that got rejected in the end?
It didn't end up like that, but I think it will infect the market.
It worried investors, didn't it?
Yes.
That there could be a political angle to their investments, but you feel that's not of concern in Sweden?
No, I don't think so. We will always have the debate, but I don't think so. And the main reason is that the municipalities in Sweden owns so much apartments by themselves.
Okay, so there's always a market there that they need to control because they have a large portion of it.
Yes.
Yeah. Okay. All right. Well, that's really interesting, Per. Thank you so much for giving us that international perspective. It seems to me that the I'm not going to call it a battle or a fight, but the kind of the market activity between those two sides is going to continue. So I think it's been a really fantastic session today. I want to thank all the panelists that we've had and all our speakers this morning for giving us, a good foundation of what's happening in the market, and then giving us that really strong perspective from domestic and international side. So, and that's the end of our program today. I would like to encourage you to look over more what Fragalu's doing in the future and the many events that they're going to have coming up. And for now, I'd like to wish you a very good afternoon. So thank you very much for joining us today.